Something just snapped in the market, and no, it was not a crash. IBM moved 13–15%, while Nasdaq 100 finished up 0.47%. That's the kind of tape where someone with size is making a statement. Tonight we answer one question: real trend extension or a very expensive fake-out? In 10 minutes, we decode breadth, expose who actually got paid and punished, and map the events that could flip this tomorrow. Okay, speed round, 1 minute, no fluff. S&P 500 up 0.40% to 6865.00. Breadth stayed supportive instead of relying on one mega-cap pocket. Quietly constructive, the kind of grind that frustrates dip waiters. Nasdaq 100 up 0.47% to 24825.00. AI-sensitive growth stayed in demand while valuation pressure eased. Quietly constructive, the kind of grind that frustrates dip waiters. Dow Jones up 0.20% to 48,900 Cyclical participation confirmed risk appetite beyond software and semis. Quietly constructive, the kind of grind that frustrates dip waiters. DXY sat at 97.70, down 0.10%. No dollar tantrum, no forced risk dump. USD JPY printed 155.50, up 0.14%. Higher levels pointed to persistent carry demand tied to US-Japan. Story of the day starts with a fake-looking rally that didn't fade. Traders came in expecting digestion after recent highs, and instead the tape kept finding buyers. Setup: Nasdaq climbed 0.47%, and PYPL ripped 5.76%. That's not defensive hiding, that's capital chasing growth with conviction. Conflict: everyone knows this only works while rates behave. Treasury yields stayed contained. If yields had jumped hard, this would have cracked. Confirmation: S&P added 0.40% and Dow added 0.20%. For once, not just 5 mega caps doing all the lifting. And volatility cooperated. VIX at 21.01, up 0.00%. That's the market saying, panic later. Insight: money paid up for evidence and clipped names with uncertainty, which is exactly why IBM got hit. Implication: this regime is tradable, but fragile. If breadth stays broad, dips get bought. If leadership narrows back to a tiny clique, the party gets awkward fast. First trigger, tomorrow. 2. Feb 24, 10:00 a.m. ET Consumer Confidence, Home Depot, HD earnings, and the Anthropic event. This is today's volatility stack. Macro mood check, consumer read-through, and AI narrative risk, all in one session. Second trigger. Then WED, Feb 25. NVIDIA, NVDA earnings, the event of the week. If NVIDIA clears the bar, AI bulls get oxygen again. If not, software and semis could both wobble. Third trigger. Rates up plus narrowing leadership equals momentum unwind risk. Rates stable plus broad participation. Trend continuation still has the edge. Keep that in winners and losers time. This is where you see who's actually putting money where their mouth is. PYPL rose 5.76% to 44.05 because money rotated out of legacy software and into fintech platforms viewed as AI adaptive, and PayPal caught that flow hard. Translation: buyers paid for proof, not vibes. ALB rose 5.40% to 177.52 because lithium ripped on fresh EV demand optimism, so Albemarle rallied even while the broader market was stuck in risk-off mode. Translation: buyers paid for proof, not vibes. GLW rose 4.92% to 146.33 because fiber demand for AI data centers keeps getting repriced higher, so Corning got bought while most software got dumped. Translation: buyers paid for proof, not vibes. IBM fell 13.15% to 223.35 because Citrini Research flagged Anthropic's Claude Code as an existential threat to IBM's 16B COBOL maintenance business. Translation: the market pulled funding from stories with execution risk. DDOG fell 11.28% to 102.62 because dragged into the AI displacement basket. If AI can write and monitor code, traders questioned observability's pricing power. Translation: The forward look. Here's the part that can ruin a perfectly good thesis. Tomorrow, pressure point. 2 Feb 24, 10 a.m. ET Consumer Confidence, Home Depot, HD Earnings, and the Anthropic event. This is today's volatility stack, macro mood check, consumer read-through, and AI narrative risk all in one session. Then watch this. WED, Feb 25, NVIDIA, NVDA earnings, the event of the week. If NVIDIA clears the bar, AI bulls get oxygen again. If not, software and semis could both wobble. After that, into next week. WED, Feb 25, Feb 25 to 26, Salesforce, CRM, and Snowflake, Snow earnings, software sector verdict. After IBM's shock, these prints become a referendum on whether legacy software derating continues. Bull case, if the tape behaves, AI fears are overcooked. IBM's COBOL cash flow does not vanish overnight. Dip buyers are showing up, and NVIDIA could reset the AI bull case. Base case, highest probability for now. Expect chop. Tech still under pressure, but selective buying in semis and cloud infra keeps rotation alive from legacy into next-gen AI winners. Bear case. If one key related news, but with signal. No headline soup. AI scare trade. Citrini's report and Anthropic Claude Code headlines slammed legacy software, led by IBM, 13%. IBM, DataDog, and CrowdStrike were the poster children of the sell-off as markets priced AI disruption at maximum speed. Anthropic hosts an event today, so this theme is not done. When the market starts repricing business model survival, multiples can compress before fundamentals even update. Meanwhile, this policy path feeds straight into yields, then valuation multiples, then growth leadership. Trump tariff. Whiplash announced 15% global tariffs, but CBP implemented 10% via Section 122 for 150 days. Policy signal said one thing, implementation said another. Traders are still untangling what actually hits importer cost lines starting now. Mixed tariff signals make earnings visibility worse, and uncertainty is exactly what keeps volatility sticky. While everyone watches tech, softer energy pressure quietly cools inflation risk and keeps cyclicals alive. Capital flight. Roughly $75 billion has been pulled from U.S. equities year to date. Synthesis. Plain English. Today's rally worked because breadth held while rates stayed civil. The market paid for evidence-backed growth and fined execution risk, so stock picking beat blind beta. If I had to bet right now, I'd lean with leadership that still has earnings air cover, hedge where estimate risk is rising, and size around the event calendar instead of candle FOMO. Earliest warning sign is simple. Leadership narrows while indices still look fine. That usually breaks late longs first. Base. Playbook. Expect chop. Tech still under pressure, but selective buying in semis and cloud infra keeps rotation alive from legacy into next-gen AI winners. Before we wrap, one stat genuinely reframes how durable this move might be. Process beats prediction. Define invalidation first, then let new... Okay, this stat genuinely caught me off guard. The $16 billion COBOL question. IBM maintains roughly 240 billion lines of COBOL code running banking and insurance systems. One AI report just erased about 30 billion in market cap. The market is pricing AI displacement years before full replacement is realistic. Visionary or hysterical, it's still a tradable signal. That's not just trivia. It reframes today as a participation story, not just an index-level headline. If participation holds, pullbacks are likely orderly. If it cracks first, treat. If this saved you 30 minutes of chart staring, hit like and subscribe. Drop a comment with the one event you want covered before tomorrow's open. Market Pulse Daily lands every market day. See you in the next one.